From October, every UK pensioner's bank account will come under stricter checks by the DWP, and if your details don't match or unusual transactions appear, your payments could be delayed or even stopped. This isn't just about catching fraudsters, it affects all pensioners, including you. In the next few minutes, I'll explain exactly what's changing, who's at risk, and the simple steps you must take now to protect your pension. Welcome to UK Insight, now your trusted guide for pensions, benefits, and senior living in the UK. Stay informed, stay supported, and enjoy your golden years with confidence. Subscribe now and join the community. For years, pension payments have followed a fairly straightforward system. Money is deposited directly into a pensioner's bank account, usually once every 4 weeks, with very little interference, unless there's an issue flagged by the DWP. But under the new rules, this system is changing. From October, UK banks will be required to share more detailed information with the DWP about pensioners' accounts. This is part of a new data sharing agreement designed to crack down on fraud, overpayments, and errors. In theory, it's meant to save taxpayers money by ensuring that only those who are truly eligible receive state pension and related benefits. But in practice, it means that every pensioner's financial activity will come under closer scrutiny. The DWP will now be able to request more regular reports from banks about pensioners' accounts. This includes confirming that pension payments are being deposited into accounts that genuinely belong to the claimant, and checking for any unusual financial activity that could indicate fraud. For example, if multiple pensions are being claimed from the same address, or if large unexplained transactions are spotted, the system may automatically flag the account for review. On the surface, this might sound reasonable. After all, nobody wants fraudsters to cheat the system. But here's the catch: the rules apply to all pensioners, not just those suspected of wrongdoing. That means every pensioner in the UK could find themselves subject to financial checks, even if they've done nothing wrong. This raises serious questions about privacy. Many pensioners are asking, why should the DWP have access to information about their bank accounts beyond the pension deposits? And what guarantees are in place to ensure this data isn't misused? The government argues that these measures are necessary to protect public funds. Fraud and error in the benefit system cost billions of pounds every year. The DWP claims that by introducing stricter rules, they can recover lost money and ensure fairness for all taxpayers. But critics warn that the policy may go too far, placing innocent pensioners under unnecessary scrutiny and creating confusion about what is allowed and what isn't. So, what exactly should pensioners be aware of? Let's go through the key changes step by step. First, identity verification will become stricter. Pensioners may be asked more frequently to confirm their details with both their bank and the DWP. This could involve providing additional documents, answering security questions, or even completing online verification processes. For those who are comfortable with technology, this might not be a major issue, but for older pensioners who struggle with digital systems, it could prove stressful and confusing. Second, joint accounts will face closer monitoring. Many married couples or long-term partners have joint accounts where pension payments are deposited. Under the new rules, the DWP will check more carefully to ensure that the pension belongs to the correct individual and that there are no duplicate claims. While this might sound like simple housekeeping, it has raised concerns about delays or mistakes, especially if account details don't match perfectly with DWP records. Third, overseas pensioners could face even tighter checks. The UK has thousands of pensioners living abroad who still receive payments into UK bank accounts. The new rules are designed to ensure these payments are legitimate and not being claimed by ineligible individuals. But again, the process of verifying overseas accounts and addresses could lead to delays or even temporary suspensions if errors are detected. Another important factor is how these changes could impact pensioners, who also claim additional benefits such as pension credit, housing benefit, or attendance allowance. Since these benefits are often means-tested, banks may be required to share more details about account balances and transactions. This raises fears that pensioners who have small amounts of savings or receive financial help from family could accidentally trigger reviews, potentially jeopardizing their benefits. So, what can pensioners do to protect themselves? The first step is to make sure your personal details are up to date. Check that your bank account is correctly registered in your own name and that it matches the details held by the DWP. If you've recently changed address, updated your name, or switched accounts, contact both your bank and the DWP to ensure the records are accurate. Second, keep a clear record of your pension payments and any additional income. Having your own statements and documentation will make it easier to resolve any disputes if your account is flagged for review. Third, be cautious about large or unusual transactions. While you are free to manage your money as you see fit, bear in mind that sudden or unexplained changes in your account could trigger automatic checks. For example, if a family member deposits a large sum of money to help you out, make sure you keep a written explanation so you can clarify the source if asked. Fourth, prepare for the possibility of additional checks. This might mean being ready to provide identification or answer questions at short notice. For those who struggle with paperwork, it may help to have a trusted friend, family member, or advisor who can assist you. Finally, stay informed. These new rules are just the beginning of a wider trend toward tighter monitoring of pensions and benefits. The DWP has made it clear that they intend to use digital tools and data sharing to reduce fraud across the system. That means pensioners will need to stay alert to further changes in the years ahead. But there's another side to this story. While the government insists these measures are about stopping fraud, some experts argue that they are also a way to quietly cut costs by making the system more complicated. If pensioners are confused or intimidated by the new rules, they may be less likely to claim the benefits they are entitled to. Already, millions of pounds in pension credit go unclaimed every year simply because people don't know they're eligible or find the application process too difficult. Adding new layers of checks and data sharing could make this problem worse. Thanks for watching UK Insight Now. Don't forget to like, subscribe, and share with other seniors who need this info. See you in the next video. Stay well, stay informed.